I want to wish you a happy Friday, but afraid from a bull's perspective, it's not going to be a happy Friday. Thursday was bad, and Friday is turning out to be tough as well. The global news flow first. North Korea has fired a missile after warning US on joint drills with South Korea. US and India plan to boost chips collaboration, Biden's commerce chief said. The Asian stocks decline after the bank rout on Wall Street, and it was a rout, and I'll tell you about it. And oil set for weekly loss as Fed tightening fears pummel the markets there, which is maybe at the margin a small positive. But frankly, if you look at the US market picture, it tells you the story. It wasn't pretty. Dow Jones 1.6%, S&P 2%, nearly 2%, Nasdaq 2%, slightly above 2%, and the banking stocks really took it on the chin. Uh, and yes, there is a specific issue impacting the US banking stocks. It's across the board per se known. But all I'm trying to say is that while that issue continues to impact the markets per se out there, the point remains that there is pain in the US market. The NASDAQ banking index was down about 8% overnight. That tells you a story or two about how bad the situation was. The other cues will come up on your screen next. And the dollar index steady, VIX went up, and that tells you the story, right? 18.32% uptick in the volatility index. That was really, really sharp for the volatility to come back. And if it stays on, suffice to say, it will have an impact on our market as well, right? I mean, Silicon Valley Bank or SB Bank uh, having the issues that it has would impact the ecosystem at large. And I think it's showing in the way the US markets and the banking stocks in particular did. There's no one-to-one correlation, but I suspect that there'll be some impact on banking stocks worldwide as a result of this. The SGX Nifty shows a start which is over 100 points down. Yep, about a percent or slightly more than that, or just slightly lower than that. But we'll start off lower. So the trade setup is simple. I mean, you don't need me to tell you or anybody else to tell you that the Nifty is susceptible to global cues. And while auto and realty were the worst performing sectors on Thursday, rate sensitives today will likely to be under pressure again. So pain might just continue. Banks are being preferred over NBFCs for the short term as rate trajectory beliefs change slowly. And therefore, I suspect that while banking may be under pressure, non-banking financial companies today might be under pressure as well. So do watch out for that bucket in the session. Um, from a news flow perspective as well, it's fairly thin. I don't see too many large companies having the news flow to combat what is the general market weakness going to be. I mean, the WhatsApp conversations on how one large company in India is being sold into by one of the largest FIs tells you a story about the fear that is there in the street. But no large caps to the rescue today, unfortunately. Maybe a Bharti Airtel, and I'll talk about it the last point on the show. But first, the stocks in news will come up on your screen. And PNC Infratech, the first one in focus. The company's been selected as the lowest bidder for two hybrid annuity highway projects, so the HAM projects, for a cumulative bid project cost of 2,000 crores. Normally, this should construe positively, and the stock may even react. Don't quite know in the session today. By the way, I'm not trying to paint a doomsday scenario. It's less than a percent cut, but it follows a similar cut in trade yesterday in the markets, and therefore it does look a bit worrying. HFCL is the other one. It's collaborated with Microsoft to roll out private 5G solutions for enterprises. Do watch out for this one too in the session today. HAL has had a wonderful last one odd month, made a new all-time high yesterday. The current open interest is above the 12-month average. The 1-month price change suggests very strong long build-up, obviously. So the average daily delivery volumes over the week have been about 1.3 times the monthly average, which is also fairly positive. The only negative is that the RSI suggests overbought level of 70. And with the markets looking skittish, could HAL finally see some bit of a pullback? Well, remains to be seen, but has done fabulously well. Um, Really, I don't think too many people can complain. If you just look at the last 1 year performance of HAL as well, from the longest time it was being touted as an expensive stock, and it continues to do well. Strong growth from the company. A couple of brokerage notes. Investec came out with a note on road infrastructure companies. And while they've maintained the buy, I think the points that they make are pretty interesting, of course. They believe that infra companies are reasonably confident of replenishing their order books in the coming months. There's an easing competitive industry in the HAM projects as smaller peers are facing funding constraints. And there is a likelihood of NHAI upfronting FY24 ordering because of the Lok Sabha elections in, in, in the calendar year 24 first half. And therefore, you might see some bit of order bookings happening or larger order booking happening in the next 6 months. But the point being, uh, that one, they need these orders to come in because the order books need to be replenished, and there is a possibility that the near term there might be margin pressures as most of the companies will go and fiercely bid for projects as orders have come off, and therefore there are near term challenges to these infra companies as well. But they work on sentiment a lot of times, they work on the order bookings, and if the NHA order bookings come up thick and fast, then maybe things could be okay for them. Let's wait and watch. The other one is Airtel. Like I said, that the only large cap that I thought, and even this is not necessarily a done deal, if anything, it's a brokerage view, but they say that the risk reward is turning favorable and they're upgrading Bharti Airtel to a buy. I believe Bharti's market share gains amongst the 4G subscribers, the hikes in voice tariffs, and improving tariff outlook due to government support for Vodafone should help Bharti drive about a 13% growth in the mobile ARPUs over FY23 to 25. The market share gains are likely to accelerate amongst 5G rollouts. They've cut their estimates by 1 to 4% to factor in the tariff hike, but they upgrade Bharti to a buy because there has been a 13% fall, and now the stock offers a 16% upside potential. The target price has been up to about 900 as well. So well, maybe Airtel could do the trick today, but it's not a heavyweight at all. Reliance is under pressure. The Adani Group was under pressure yesterday. And as a group that drives sentiment, that's what I'm saying. Otherwise, from a weightage perspective, it's not that Adani Enterprises is a meaningful meat on the markets, but banking may be under some bit of stress today. NBFCs may be under stress today. Reliance has been under stress for the last couple of days. All of that probably points towards a difficult start at least. The only conundrum in the markets would be, and from a trader's perspective, it's a big one, that Wednesday saw the markets go down and recover very, very smartly to end in the green. Yesterday was a complete opposite, and today the global cues are stacked against the bulls. Can we see a recovery late into trade? Unlikely as it may be. Is that something that will be in the minds of people? Remains to be seen. But thanks so much for tuning into the trade setup. It's a short one today, but thank you for tuning in. Have a great day ahead. And we debut made our brand new series Insight today. We're talking about the hotel sector and only the hotel sector for 23 minutes on a trot. I urge you to try and log into the show, hear it, hear the management, hear the expert, and try and give us feedback on Twitter, to me personally or otherwise, about how you find it. We'll try and incorporate your suggestions to make it a better show going ahead. Thanks for tuning into the Trade Setup today.